This is Randy Finney with Right Side of the Chart, and today is Friday, July 21st, 2017. This video will cover the airline sector and some of the trading ops that stand out right now. I know I've done quite a few videos in the last couple days, and what I'm doing is trying to focus on the most bullish and bearish sectors. A couple days ago, I did 5 videos. I believe it was 5, 4 of which were bullish sectors. Commodities, things like that, only one bearish, and I've added a couple yesterday. I added did a video touching on the transportation sector, but mainly focused on the railroad stocks. The other bearish sector the other day was home builders. Now, here's the rub or the issue with this. These charts to me are clearly bearish, and I have what I'll just say is the highest degree of confidence they're going to play out. Ultimately to the downside. There's just so many things lined up. However, unfortunately, right now, as luck would have it, right as all these stocks are, approaching the apex, or their sweet spot and their rising wedge patterns, or dancing on trendline support. It just so happens to be that we're in the thick of earnings season. So when you go to the home builders, as I posted in the last update on XHB, there's a handful of the biggest home builders that report in within the next week or so. Same story on the railroads. We had one report yesterday, UNP. That was a big one. They're down. That's already below a trend line. I think UNP is a short now because earnings are out of the way. You had another one reported today. Was it NSC? And there's still some more coming up. There's not many railroads. And the reason I'm doing these videos, I know some of you might prefer to just throw up my charts, whichever charts I think look best. The problem is with the railroad sector, as well as the airlines, they do not have any ETFs that you can short. So ETFs are great because for some people, because they mitigate any losses if there's a gap in one of these individual stocks, big earnings beat or miss. It's that big opening gap will be mitigated by all the other positions within there. So ETFs have that relative safety, but as I often say, you short an ETF or you go long an ETF, you're going long or short all the bullish and bearish stocks within there. So that's point number one. Point number two, there used to be an ETF. A few years ago, I used to trade FAA, which was an ETF that tracked the airline sector. For the life of me, with the proliferation of ETFs in recent years, there's an ETF on just about every sector, commodity, you name it. Not only that, they have 2 times short, 3 times short, or 3 times long leverage. I still can't understand why they took that ETF. It just must not have been doing well. But either way, enough on that. To the best of my knowledge, there still is not an ETF for the airline sector. However, I'm seeing a lot of good setups, and hence the reasoning for this video. These setups, they're kind of like my kids. Can't pick a favorite. I love them all. Not every single airline. We'll go through these, and there's only a handful. So here's the list. We're looking at the XAL, which is the airline sector, Amex Airline Index. It's been around forever and a day, and here's the components of the XAL. So the chart is pretty clear. We had a downtrend line here. This goes back to the left of the chart. That was a breakout there. That was bullish, and there's been a nice advance in the airline stocks. I'm sure part of that, some of the wind behind their sails was falling oil prices. Oil is, last time I checked, was the second largest expense to the airline industry behind salaries, payrolls. And they try to hedge, but for the most part, obviously low oil prices will help the airlines. High oil prices hurt it. So, with that being said, oil's, probably pounded out. Appears to have pounded out a bottom. Whether it trades sideways for a while or not. Let's just not get too much into that now. But for the most part, just a lot like interest rates. There's nowhere but up for the most part, in my opinion, on oil. And whether that happens to be the case or not, the charts are clearly bullish here. What I'm focused on, at this point we had a descending broadening wedge pattern, these 2 lines. Let's color these purple so you know what I'm talking about. Descending broadening wedge patterns are typically bullish patterns, and this one broke out. And there it is. Got to extend that trend line a little bit, and we had some more upside. Now we've set up in a very clean bearish rising wedge pattern. Here's your uptrend line to that pattern with numerous reactions. clear negative divergences. Those divergences are confirmed. You see this the PPO is crossing over now, effectively putting in a lower high. And the scope of this pattern, a rough estimate to get a measured move on a bearish rising wedge pattern. No need to pull out the calculator. Just take a trend line like that, measure the widest part of the wedge, and add that to where the wedge breaks down. So if you want to know my target for XAL, that would be it, right about 102.50 or so. That assumes a breakout soon. If we have another thrust within the wedge, maybe we don't break out up until this level. That brings it a little higher, but as of now, that's what I'm looking at. All right, let's just dive into the charts of the individual components. And a lot like the other sectors I just mentioned, we have a lot of these major airlines are scheduled to report soon. I'll go over these as I cover the chart. DAL, I think you have a green light to short here because they don't, according to the source I checked, and keep in mind these sites, I like to use earningwhispers.com. There's a link to that on the front page under Tools of the Trade. They all do the best to estimate when a company will report, but a company doesn't announce their quarterly earnings till they get up close to that time. So what I'm showing is that DAL is not scheduled to report until October 12th. So it looks like they must have recently got earnings out of the way. And what we have here, this line was pretty significant. You see a reaction high here, reaction that pulled back and then broke out. So what I'm looking at on this one, a couple things. I see a failed breakout to new highs as of now because we've come back down below there, as you see, as of today. So number one, we failed that breakout. Numerous attempts, three different failures there, maybe even more if I go to the left of the chart. This spans 2 years. And then if not more importantly, is a well-defined uptrend line. You see this ascending price channel right here, and we've broken down below there. So you have support here. And there's a lot of downside. I'm just showing you some of the earlier targets, and I'll probably follow up with some of these official trade ideas. But again, in the last few months, the most profitable trades by far on the site have been the unofficial ones when I do videos. Like, for example, the solar stocks. I went through there and I have dozens in my watch list, but I only have about a dozen or so starred or flagged as my favorites, and those are the ones I started focusing on a few months ago, and nearly all of those are up high double if not triple digits. And if you want to know why, we had a couple, First Solar, I think, maybe SEDG, as official trade ideas, but it's just too many to track. To put up, official trade ideas require all the updates, posts, every time a trade stopped out, all the different parameters. And so I felt much, there was quite a bit of disparity in the charts within the solar industry because there are some make chips, some make panels, they have different technologies, and they don't all track together. So the handful that I picked, and again, you can go back and look at those videos, vastly outperformed the ETF TAN, and that's why I didn't put TAN as a trade idea. I just thought there was too much disparity within the solar sector. If airline sector had an ETF and it had a lot of these names that I'm looking at, because I think most of the airlines are headed lower, that would certainly be a trade idea that I would add. Unfortunately, they don't, so you take these. There's Delta breaking down. Enough on that one. And I told you earnings, at least what I'm seeing, you can verify that October 12th, so you don't have to worry about waking up to a gap against your position, at least an earnings-induced gap. There's always news events and other things that can happen. But here's LUV, Southwest Airlines. It's just beautiful uptrend line, bearish rising wedge, negative divergence. We had a rising wedge here. You had divergence. See right here at this peak on the RSI and the MACD. So that was divergence number one. And although it may not look like much, that was good for a 14% pullback. This is a second consecutive divergent wedge, and I think we go back down to at least that level. Each of these are support levels, which I expect a reaction, or think the odds are elevated. I wouldn't care to cover here at this first one, but this is along the lines of how I think this one will play out. And if things get really ugly, then it can come all the way back down here. So to try to quantify that for you, my preferred swing target at this time, that's about a 15% drop, and my if things get ugly target, about a 20% drop. So oh, by the way, LUV reports, here's the thing, reports less than a week from now, July 27th, before the market opens. So that's the dilemma there, or at least a factor you need to take. Now, as I often say, if the charts are clearly or bullish or bearish, that tends to be the way that the stock will react after earnings. So in the case of these airline stocks, I don't see the vast majority of these charts are bearish. They look toppy. They're already breaking down. Maybe you get an initial snapback after earnings, but I think the trend will continue down. So a lot like everything else, if I'm going to engage a sector, I'm not going to pick just one or two airlines, especially if they're about to report. I'll pick a handful, maybe one or two gap against me, but if I have half a dozen or more positions, I'm pretty confident that overall my short on the airline sector will be profitable. I haven't marked up all these charts. I figured I'd do that. I just wanted to get the video out. So let's move these lines and show you the very steep recent divergent high. Very nice looking top here. We looked at like some consolidation here. Looked like we're breaking out of that, but we failed. And we failed impulsively so far. And we've taken out this fairly well-defined uptrend line. This is super thin. You can see the volume at price histogram bars I have to the left, these green and red bars. What that tells me is Ryanair is flying at an altitude that's just too high. This one's like it's not going to be a straight ride down if it gets there, but I can easily see the possibility of a move back down here. There's some support there. There's a few gaps along the way. Again, I don't see a straight shot down, but I do see the potential for this stock to fall. Let's just add another line here. There'll be so many traders watching this support level that they might step in here at this gap, and even then that would be a was that 19% gain on that one. So let's move on. Reporting on July 24th. So so that one's going to be reporting early next week. Again, tough call. Up to you. And the thing about waiting for earnings to be out of the way, as these companies report, the charts to me are already indicating this sector has topped and is poised for correction. So what will likely happen, what I think will happen, is the majority of these companies are going to miss, and the earnings reports are going to be negative, or their guidance will be negative, or maybe both are positive, but they still sell it. That happens, and it happens quite a bit in trading, where you have a rosy earnings report, rosy guidance, but the stock has just gone up too much. It's the current supply dynamics of the buyers and sellers within there, and they sell good news. Just like in a when a market's bottoming or a stock's bottoming, bad news is no longer bad news and doesn't get sold into. Sometimes stock will rally on it. So that's what I'm looking at. And my point being that if you wait for earnings to be out of the way, here's the rub, then what you can do, let's say you want to short American Airlines, AAL, they report on July 28th, I think. Yeah, July 28th before the market opens. So let's say you're going to wait. What you might see is that stock gaps down all the way down here. This would be a target level. Like I said, I haven't mocked up all these charts, added all the levels, but there's a couple support levels here. You've got support right around here. So my expectation, let's just say they were to report tomorrow, hypothetically speaking, is that it'll probably gap way down below there, thereby denying you an objective entry. If you have a stock that gaps all the way down to one of the price targets or a key support level, and it's a big gap, let's say 4 or 5% or more, that's not a very objective entry. So there are times where I will position immediately in front of earnings on certain stocks, and that's going to be the case with these airline stocks. Like I said, I really like these charts, hence the reason for this video. All right, UAL, United Airlines Group. I'm sorry, United Continental Holdings. I forgot these guys keep merging and combining over the years. October 17th. Okay, so we're clear on earnings on this one according to my source. So we're already at, you can see this was this is textbook technical analysis, and I like to see that too. If I'm trading a sector, some seem to defy the technicals. break down from clearly bearish chart patterns, then turn around, reverse, and just keep going up. Semis are a good example of that. There's just a voracious bid for semiconductor stocks recently, and the time will come when that ends, and then the technicals work like, you know, like they should. As of now, I can see, here's all the levels. And what we're looking at here, this line and this line represent a bearish rising wedge. You can see the uptrend line starts back here, numerous reactions, breakdown, back test of the wedge, and then impulsive selling. It doesn't get any better than that. If you're doing a textbook on chart trading patterns and rising wedge breakdowns, back test, this one would fit the bill. You can see it's very clean. And here's the next. I expect a move down to at least this level. And then what I look at on this chart, I look to the left and I notice this thin zone here on the price to volume at price histogram. And the reason for that thin zone is there weren't many trades between there. We had a quick rip up. What we had here, and this may go back to the left of the chart, I'm only going back 2 years, we had numerous failures here at this former resistance level, which is now support. Once we broke it out, this again is how technical analysis works, that's a breakout. So you had a swift move up once UAL broke out, followed by an uptrend. There was a little pullback correction, push back up, and it appears that this run has now come full circle. So it appears to me that we're in the early stages of a new downtrend in the stock. And ultimately, again, it depends on a lot of variables, how the transportation sector acts, how the broad markets act, any one sector, especially if there's somewhat correlation with the broad markets, is only going to go down so much if the broad markets continue to rise. So my point being is this would be my minimum target. But if the airline sector as a whole, all these stocks that I'm covering right now, tend to start getting some downside momentum and traction, you see the other transportation stocks playing out the way I expect, then I would expect this thin zone to be filled, and that would be my final targets just above 61. So that'd be a pretty nice swing trade there. And again, stops, if you short this one, right now you're at support, not really the most objective entry. I wish I would have been focusing on these a couple weeks ago. I would have noticed that breakdown and back test, and either that breakdown or the back test would have been an objective entry. It's come down a little much, probably due for a reaction, but then again, we have earnings coming up on a lot of these, and if these guys are coming out with bad earnings reports or bad guidance, you can see this sector really go down quick. I mean, just look back in time. When the trend is down, it can keep going down like it did back here. Wrong tool. Like it did back here, like it did here. Just like it can go up very quickly in an uptrend. So this move, as much as it is, I'm saying it's not very objective to add right now, but that doesn't mean this stock can't do that. All right, a couple more. I'm not going to go over any charts that don't stand out to me. GOL, you had a divergent high right here, and that broke down. And there's an example where it gapped down. I didn't write down the earnings on this one. That might have been an earnings-induced gap. That's a pretty big gap. Most likely that was earnings. I'm not sure. Came down to support, and it's bounced back up. Now, actually, this one looks like an objective short now because this is a gap backfill. See the big gap? Gaps are like magnets there, and they're often backfilled. So what we have here is a big gap, which was just backfilled. So whether or not that stock's going to new highs, I can't tell you that with the highest degree of certainty. What I can say with certainty is that it is an objective short entry to short here because that gap, the top of that gap, should act as resistance. And so far it has. So you short the top of a gap with a stop not too far above. Maybe you want to stop. Depends how much downside you're looking for. If you're looking for a move down here, which I think this one could easily do, that's a pretty big move. That would just cut the stock in nearly a third. So this stop over the new highs is commensurate with that price target. If not, if you're only looking for a short down to this level, then that might be a little too much. It's all about risk to reward. I like a risk-reward ratio of at least 3 to 1, meaning I'll risk $1 of loss to make $3 of profit or better. So percentage terms, this guy moves. So this one, you got to allow yourself a about a 21% stop loss if you shorted here. But the profit potential is 61%. So see how that sort of meshes in line with that 3-to-1 RR, and it's all relative. So if you're not comfortable taking a 21% stop, don't do it. However, the trick to that, or the way around that, what I always talk about is beta adjusting your position size. So if you normally, your average, trade is, let's say, $10,000, but you only allow yourself a 8% stop loss, well, just short $3,000 of this thing, because what's going to happen is your return is going to be about triple what you expect. Your stop loss in percentage term will be about triple, but in dollar terms, it's going to be what your normal stop allowance is, and that's the most important thing, dollar terms. Percentages are just numbers. That's really irrelevant. It's how much money you make or lose on a trade. So that's one way around trading these high-flying stocks with big swings. GOL, I didn't have the reporting date for you guys. ALK, Alaska Air, divergent high right there. I mean, that's this one topped a while ago, and since then the stock fell from that divergent high, dropped 19%. Had a kickback rally, but a lot of these, if you go back to these longer term charts, they show you the airline sector is flying at an altitude that's really not that safe. A lot of hot air, thin air up there, so these guys can continue down more. Not one of my favorites. I'm just going to say that now. So let's move on. JBLU, JetBlue Airways. There's a very nice uptrend line to watch. This is a resistance zone. Numerous reactions on these two lines. So the stock right now is at resistance with a divergent high, not marked up here. We can go all the way back to this point, and you can look at really divergence right there on the PPO and RSI against that line I have drawn up here in prices, and you can also look at this larger, more powerful and more significant divergence off this reaction high in the PPO as well as the RSI. So there's one divergent high at resistance. An aggressive trader can take a shot up here at resistance. It gives you more favorable entry, but the higher probability entry is to wait for a break of that uptrend line right there. Maybe you take a partial position here with a stop somewhat above, adding on a breakout of that trend line. JBLU reports on the 25th, so you only have a few days. Maybe wait that one out. It's up to you again. LTM, not one of my favorites, but there's a trend line. It poked its head at a little false break there, but I still think this trend line's valid. You have a reaction here, 2, 3, 4, 5. So there's a trend line. You could short that one. Not one of my favorites, but I see it coming down here to at least that 990 level and possibly any of these other levels. Again, it depending if and when we get an ugly correction in the sector, then we're looking at some of those longer term targets. Let's do a price channel here. This one is moving up in this ascending price channel. There is divergence. I could draw it out there below the channel. And so you need to see your primary sell signal is a break below that price channel. It's well defined. It's been in place now for about a year. And I can add some lines along the way, but this would be my ultimate swing target down here. And if that level's hit, the stock's at 129 right now. That would be a drop of about 35%. And if it gets real ugly, I could see this one going down 44. And I know if you're new to trading and you think, 44% gain, trust me, that's nothing in these sectors. I've traded airline stocks for years. Here's a 78% drop. You go back, and that's just the nature of the beast on these things. You catch a trend, and it's pretty powerful. SAV, I don't think a lot's going to save this one. This is Spirit Airlines. It's already topped back here. You had a price channel, breakdown of that channel. That set up a downtrend line, broke out of the downtrend line, had a nice counter trend rally, failed right at those previous reaction highs. So essentially you have a double top high in this one right here. And A double top pattern, if you look that up, and I encourage you to look up any of these patterns if you're not familiar with them when I throw out these terms, what you look at is the base of the double top pattern. So you now have a double top in place, but this is the base of the pattern. Excuse me. And a sell signal is triggered when prices break below the pattern. Now we had a brief, that was an intraday spike, but we closed back above it. We have reactions here, we have reactions here, a lot of reactions at the bottom of that pattern. So there's your sell signal, would be a break below the pattern, especially impulsive, and to gauge how far prices might drop, the measured target of a double top pattern is to take the distance of the pattern and add that to where it breaks out. So that gives you a target down here around this level. Some support there, and to quantify it for you, that would be trying to grab that line, roughly an 18% drop. Save reports on the 27th. All right. This is Hawaiian Holdings, symbol HA or HA, although there's really nothing funny about this chart. Looks like another double top pattern. Sorry, I had to pause the video there. I don't know if I went to the next one or not. I just covered a double top. What was the previous one I covered? Save. Yeah, okay. So I already covered that one. I had to pause the video right before when I looped into this one. So yeah, we are looking at another double top pattern, and you can see it there pretty clearly. Here's the base right here, the pattern. You have reactions all the way going back to here. So I'll shade it that way. Use the wrong color, but either way, you get the picture. So there's your double top, two tops, the base of the pattern, and the measured target would be grabbing this line up to here, bring it up a little bit, break up below the pattern, and that would take us down to, I wouldn't go all the way down there. I see some support right here on this reaction, so that's where I'd be covering that one, about 35. And there's an intermediate target, first target, if you want to just book quick profits. Let's say the market's still doing well, transportation sector looks to be firming up, or you want to just, game a bounce here that's probably going to have a reaction there around that 39.80 level. So maybe set a buy to cover order a little bit above that, or just let it, if you get a good entry and you're profitable, set your stops above just above the top of the breakdown level, and then just set a buy to cover order here with a stop above. I like to use those OCO, one cancels the other order. You put it in place, leave it. You can be at work, you can be traveling around the world, it doesn't matter. That stock will either hit your stop and be automatically taken out, or hit your profit target. Takes the emotion out of trading. Let's see, HA reports, did I write it down? Yeah, on July 25th. So there's another after the close, another one coming up, about to report. Allegiant, I wouldn't short this one at all. In fact, this one looks more bullish than bearish, looks to be bottoming. I don't have much of an opinion on it, but I definitely wouldn't short that one. SKYW looks toppy here. Again, I haven't updated a lot of these charts, but we have a reaction high up there. You might be able to put some trend lines on here. Let's see how it looks. Come off the lows. Yeah, that might be your primary uptrend line right there. This one may want to punch out one more marginal new high. If so, that would be nice, because that would give you a divergent high right here. So let's say the ideal scenario, you don't always get what you want, but the ideal scenario here would be a pop to new highs. Let's do that. And followed by a reversal and a breakdown of this downtrend line, and bring you down to any or all of these targets. These would be your 1, 2, 3 profit targets on that one. And that's a pretty big drop. The stock's at $38 right now, and it could work its way all the way down to 22. VLRS. This one I had an inverse head and shoulders on back here. I just clicked the add the note button, and I never filled in. This is left shoulder, head, right shoulder. You have to type in the text. I never finished up on that one. Down sloping neckline, and it broke out. Played out for most of the move. Head and shoulders pattern, you take the distance from the head to the neckline, and then you add it to where it broke out. So it played out to a little more than halfway of where it was expected, but it's reversed pretty quickly. It looks like it might come here to backtest. I wouldn't short this one. If anything, if the sector's holding up, you go long there. It's also a non-U.S. company. This is, I'm not sure where this must be, in Spain, maybe possibly South. Yeah, I guess that's a Spanish company. AVH, Avianca Holdings, another non-U.S. airline, actually looks more bullish than bearish to me. So again, this is why, if there was an aviation ETF and it had all of these, you're going to have stocks like this. This one has, bullish divergence in place. It's already come down quite a bit. And if it pops, you've got some targets up here. You have a gap to be filled, and then maybe a run at the new highs. May continue down within this channel. The divergences may be burned out. These are your support levels, but so not one that I'm looking to trade. Just wanted to go over that. All right, that's a bankrupt one. When you see the letter Q at the end of a ticker, that means it's bankrupt. And it looks like this one was trading, and then flatlined, meaning they probably finished the bankruptcy proceedings, and now that stock is nearly worthless. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.